All right, let's dive right into this massive Q3 2026 earnings report from Raymond James Financial. Navigating the financial sector right now? Yeah, it's no small feat. But, these numbers, they paint a picture of a company that's literally firing on all cylinders. Welcome to today's Explainer. We're going to break down exactly how this legacy institution just posted some truly staggering results, and honestly, more importantly, where all that momentum is actually coming from.
So here's our game plan for this explainer. First, we'll hit those record-breaking quarterly results, then look under the hood at their private client powerhouse. After that, we'll check out markets, management, and banking. Hear straight from the CEO. And finally, map out the future outlook and momentum. Let's get right to it.
And we are starting with an absolute bang. $3.93 billion in record quarterly net revenues. I mean, that is a massive 16% jump over this exact same time last year, and even a 2% bump from just the preceding quarter. So what's fueling that? Well, looking at the report, this surge was heavily driven by just continued relentless growth in asset management and administrative fees. Those brought in about $2.1 billion all on their own. When your top-line revenue hits nearly $4 billion in a single quarter, you know for sure something is fundamentally clicking behind the scenes. But the sheer scale doesn't stop there. Look at this. Client assets under administration hit a record $1.92 trillion. Just to put that into perspective for a second, that is up an impressive 17% from June 2025 and up 9% from just March of 2026. Managing nearly $2 trillion places Raymond James in a highly elite tier of financial institutions. It really shows an expanding base of trust and, obviously, a growing pool of capital to generate those administrative and management fees we just talked about. All right, moving right along to our first core section, record-breaking quarterly results. Okay, so top-line revenue is fantastic, but how does it actually translate to the bottom line? Well, quarterly net income hit $595 million. That's a record $3.01 per share, marking a staggering 42% year-over-year growth. Now, the report does note this was helped out a bit by a lower effective tax rate for the quarter, but hey, even if we adjust for lower tax rates and some acquisition expenses, we're still looking at a highly profitable quarter by pretty much any metric you choose to look at.
Which brings us to Section 2, the private client powerhouse.
Now, before we celebrate those specific record highs, let's quickly touch on net new assets. As you probably know, this is simply the total value of new money brought in minus the money withdrawn. In wealth management, this metric is literally everything. It's the purest indicator of organic growth and client trust out there. Because, markets go up and down, that can artificially inflate total asset numbers, but bringing in fresh, net new assets means you are actively taking market share from the competition. So keeping that in mind, get this. The Private Client Group hauled in a massive $21.7 billion in domestic net new assets in this quarter alone. All that fresh capital drove a 14% revenue increase for the segment, pushing it to $2.84 billion. And even better, those highly prized fee-based accounts, the ones that give you that sweet, recurring, predictable revenue, hit a quarter-end record of $1.15 trillion. The bottom line here? The primary growth engine is absolutely roaring. Let's shift gears to Section 3, markets, management, and banking. And you'll see that whole all-cylinders firing narrative holds up straight across the board. Capital markets revenues spiked 25% year over year, which was mostly driven by a huge 40% jump in investment banking and M&A activity. Meanwhile, asset management grew by a strong 24%, and the bank segment kept things moving with a steady 7% rise. If we look a little closer under the hood there, asset management grew a massive 31% to reach $345 billion. That was actually supercharged by the recent $36 billion acquisition of Clark Capital. And over on the bank side, the real surprise was a 67% jump in pre-tax income over the prior year, bringing it to $206 million, largely fueled by robust growth in securities-based loans and residential mortgages. Let's move to Section 4, the CEO's perspective. It's always crucial to hear from leadership, and CEO Paul Shoukry provided a really grounded perspective in the press release. He made it a point to emphasize that this wasn't just catching a lucky break in the market. He stated, "Our consistent performance reflects our long-term approach, the resiliency of our diversified business model, and the commitment of our associates and advisors to serving clients with integrity." He really credits the firm's culture, one built on putting people first and earning trust over generations. And honestly, when you see $21.7 billion in net new assets flow into the Private Client Group in just 3 months, That generation-spanning trust he's talking about is undeniably translating straight into the financial results. And finally, let's wrap up with Section 5, Future Outlook and Momentum. As you'd expect, management is feeling highly optimistic heading into their fiscal fourth quarter. This momentum is backed up by historically strong business drivers, really robust advisor recruiting, and a super strong investment banking pipeline. But crucially, they've got the war chest to actually support it. They're sitting on a highly comfortable 22.5% total capital ratio, plus they have $1.1 billion remaining in authorized stock repurchases. So, long story short, they have the cash to aggressively invest in growth while still returning serious value to their shareholders. Which brings us to our final takeaway. We've seen the record revenues, that huge 42% spike in net income, the massive Clark Capital acquisition in asset management, and these really robust pipelines going forward. They've absolutely proven the resilience and power of their diversified model. So that leaves us with the ultimate question for the market to decide. With all cylinders firing at record highs and an expanding $1.92 trillion asset base, can Raymond James actually sustain this incredible double-digit momentum right through the end of the 2026 fiscal year? The foundation is certainly there, and man, the upcoming quarter is going to be fascinating to watch. Thanks for joining me for this explainer, and I hope this deep dive brought some real clarity to these impressive financial results.